I'm just seeing where the hedge is being built up, Ryan. They're buying 120s, 110s, and 90s today. Yesterday they were buying 50s. Can we hit 80? Sure. How long are we gonna stay there though? Is it gonna be just in pre-market? Ding ding. You have to understand, Ryan JP, that market expectations change minute by minute. 24 hours is an eternity. Yesterday, they're buying $50, $60 puts. Today, they're buying 90, 110, 120. That changes everything. People are YOLOing into further dated calls, not an exceptional rate, but there are people buying them. Like 1.2, 1.3 million notional and far dated calls, which is going to raise Vega neutral. To think that a prediction on the market stands for more than the second it's predicted is childish. The only thing that you can say is over time, things will generally go up. People that can't accept that the market is a living, breathing, changing beast are going to lose it all. Yeah. You can't expect the same thing to be the same 2 days in a row. I know it sounds ridiculous, but it's true. If they were hedging further down, I'd be more suspicious of a harder push. But they're not. The positions they're building today are bigger than the positions they were building yesterday and the day before. So, you know, the notional value of puts in the $90 range is far higher, which means, you know, they're hedging a zone, right? And we're not going to be able to tell what that zone is until it's fully fleshed out. But the concentration of puts right now has shifted. So here we have, like, you know, $50 puts, and here we have 120 puts with a concentration between 100 and 80. So, I mean, this is what it looks like their target is today. Yeah. Thank you guys so much. So for price action today, I think we saw most of our early price action for GME this morning. I think kind of right up until we hit these two resistances, this was mostly that hedge from yesterday. That like 1 million share hedge. It was like 1.023 or something like that hedge from the MMs. I think that drove a lot of our initial morning price action. I think once that trend got confirmed, we started to see call delta rising up until we hit our peak here. Once we started stabilizing, we see net delta fall off the chain. And the net delta continued to fall off throughout the day. Almost all of our price action today, just delta hedging, whether it be from calls or from puts. I think we're seeing large put positions built up throughout this entire flat trading period. And the reason they're not tanking the price is because they don't want those puts to go in the money, and they don't want those puts to increase in value. They simply want to build volume in their position. Then, once they have volume in that position, they will short. In the meantime, they will try to return as many shares as they can, crush IV as much as they can, and get ready to leg the stock down again. And that's what they're positioning for. Will they be successful? We don't know. You know, like institutional longs came in today and bought calls. They bought weeklies, short dated calls. But on this recovery period, just like with Wyckoff, where the longs, you know, reposition on the dips and try to drive the stock further up into the next run, longs can be repositioning here as well, into farther dated calls, and we may see longs reposition today and tomorrow. And it's a constant battle, but if longs come in with significantly more call volume than the shorts are able to, then we're gonna move up, right? Anyway, we closed at 128.46 today, up 11.54%, which means that we should have a decent delta hedge tomorrow. It won't be as significant as the one today. Probably about half the value, especially with the amount of net delta sold off. So remember, they're only going to hedge what they absolutely have to, and that'll be calls in the money carried over into tomorrow. And a significant number of those calls were already sold off at 148 today. So relatively, I don't think it's going to be maybe half of yesterday's delta hedge, maybe less. So don't expect as much volatility in the morning, especially in the pre-market. Again, pre-market volume will be a good way of analyzing expected volatility at market open. And that should be about it. As far as our Renko chart goes, we do look like we've at least established enough volume at wait, there we go. We've established enough volume to form another block at the slightly lower resistance at 126.70. This is a strong resistance. It was strong in the past. It was strong throughout our March run. It was a strong support here, strong resistance back in February as well. And while what you will notice, and this is something interesting about variance swaps, is that the price range, even though the price increase is still relative. So we're still trading in the same range as the previous like swap entry period, which I think they use these FTDs to catalyze, right? And so it's very likely that we move down from here, especially if they were able to enter swaps, which could have been a large amount of the options volume that we saw, especially institutional options volume that we saw. Gary Gensler, great gamma. And so, I mean, yes, a downturn in this is not ideal. The drop off in volume into the latter half of the day also not great. But there is still potential for some run tomorrow, but we'll see. I'll be watching, obviously, gamma neutral, delta neutral. The signs currently, from what I'm seeing JFresh saying, look pretty bearish. But we'll keep an eye on it. And if they do begin to tank the price by the end of the week, we have an idea of their target range. All right, guys. Thank you so much. I appreciate it. And I will see you guys all bright and early tomorrow morning. Also beat and ripping. Awesome. Have a good one, guys.